For many of us, life settles into a predictable rhythm. It is a rhythm of daily commutes, work deadlines, children's school projects, and weekend family gatherings. Then, one ordinary evening, the phone rings with news that a parent is unwell. A sudden trip to the hospital disrupts this carefully managed balance. When a parent falls ill, the first worry is for their health. But soon, another anxiety surfaces: the looming cost of care. This is a silent risk many Indian families face, a sudden financial shock that can derail years of planning. The dream of a new home, a child's education, or starting a business gets pushed back indefinitely. We plan for weddings, education, and retirement, but parental health often remains an unaddressed risk, forcing a recalibration of our most important goals. A sudden medical need can force impossible choices, pitting a parent's health against your family's future. When a parent is sick, your focus should be on their comfort and recovery. But when you're grappling with arranging funds and worrying about depleting your life savings, your energy is divided. This conflict leads to immense stress and exhaustion. This story is not an isolated incident. It is a reflection of a systemic vulnerability faced by millions. However, the anxiety and financial strain experienced are not inevitable. You do not need to be a financial expert or have immense wealth to protect your family from such shocks. The first line of defense against a medical crisis is health insurance. It's a financial shield against large hospital bills. Your goal is a simple, affordable plan covering inpatient hospitalization and major surgeries. First, check eligibility for government schemes like PMJ. You can do this online or at a common service center. If those aren't an option, explore private insurance. A family floater plan can be an economical choice, covering both parents under one policy. When comparing plans, focus on the fundamentals. When choosing a policy, check for network hospitals near your parents' home for cashless treatment. Pay close attention to the waiting period for pre-existing diseases and check for sublimits on room rent, as these can lead to unexpected costs. Premiums for seniors are higher, but view this as an investment. Even a basic policy is far better than none at all. The goal is to put a shield in place to protect your family against catastrophic costs that can wipe out your savings. The second step is to prepare by keeping a dedicated pool of cash ready for immediate, smaller expenses. Health insurance is a shield, but it won't cover every expense like diagnostics, post-discharge care, or travel. Insurance approvals can be delayed, requiring an initial deposit. So, have a dedicated medical emergency fund. Aim for 1 month of expenses plus a buffer of 50,000 to 1 lakh rupees. If that feels intimidating, start small. Keep the funds separate and liquid in a high-yield savings account, or use a sweep-in fixed deposit account, as this separation creates a psychological barrier and makes sure the money is easily accessible. Avoid locking it into property or equity funds with penalties, as the fund's purpose is speed and availability. Split the fund into 2 parts: an ultra-liquid portion and a slightly larger portion for post-hospital expenses. Ultra-liquid in a savings account, the larger part in a liquid mutual fund, or a short-term fixed deposit you can break in a day. Building this safety net takes time and discipline. The sense of control it provides is immense. Ready cash lets you focus on your parents' well-being. The third and final step is to clarify legal and administrative matters to avoid confusion and delays during a stressful time. During a medical emergency, the last thing you want is to be scrambling to find documents, guessing passwords, or arguing about who is authorized to make financial decisions. Confusion and administrative hurdles add unnecessary stress. This is why Step 3, ensuring legal and documentary clarity, matters. It's about organizing information and establishing authority beforehand, so you can act swiftly. Not complex legal battles, simple, practical organization that brings peace and order. Start with basic, immediate tasks. Sit down with your parents. Ensure their bank accounts have a named nominee. Fixed deposits should have named nominee. Other investments should have named nominee. Explain nomination as the instruction that lets banks transfer funds without lengthy legal procedures. Create a master file, physical or digital. Include identity proofs. Include a list of bank accounts. Include insurance policy numbers. Include a detailed medical history. List current medications. List allergies. For complex situations, consider a power of attorney. A POA lets a trusted person manage financial matters. It also covers property matters. Useful examples: signing hospital forms, operating bank accounts to pay bills, filing insurance claims. It grants authority to act in your parents' best interest. Encourage a simple will. A will prevents disputes and ensures wishes are respected. Approach the conversation with sensitivity. Frame it as preparedness and ease for everyone. Let's put all the important papers in one place so we're never searching in an emergency. Even when we know these steps are logical and necessary, taking action can be difficult. Most of us delay this crucial planning. It's important to understand the human reasons behind hesitation. It is rarely negligence, overwhelmed by daily demands, emotional discomfort with the subject, delicate parent-child dynamics, jobs, our children, social commitments. Adding a major project like researching insurance feels exhausting. We always say we'll do it next weekend or next month, right? The emotional barrier is often the biggest. Talking about illness, aging, and money feels awkward. It forces us to face our parents' vulnerability. For parents, it can feel like losing independence. They might say, "We are fine, don't worry." That resistance often comes from pride and not wanting to impose. They've managed things for decades. Handing over the reins is hard. There's also a real fear of cost. On a tight budget, another monthly premium feels impossible. That pressure causes procrastination. We tell ourselves we'll act after a promotion or after the next EMI is paid. We focus on today's real expenses instead of tomorrow's abstract risks. The cycle repeats. To break the inertia, reframe the process. This isn't just finance, it's an act of care. It's a modern expression of love and responsibility. To move from passive understanding to active planning, here's a simple 30-day sprint. Week 1. Start the conversation with your parents and gather key documents like Aadhaar, PAN cards, and medical records. Make digital and physical copies. Week 2. Shortlist 2 to 3 insurance options and make a decision. Week 3. Open a dedicated family health fund and set up a small regular transfer. Week 4. Finalize all nominations and create an emergency contacts sheet. In Week 2, focus on protection. Check eligibility for government schemes or shortlist 2 to 3 basic health insurance plans online. The goal is to have clear options ready. Week 3 is for your cash safety net. Open a separate family health fund account and set up a small, automatic monthly transfer. Even 1,000 rupees is a great start. In the final week, focus on clarity. Revisit your insurance options and make a decision. During this week, check the nomination details on all your parents' major bank accounts. And check the nominations on their fixed deposits. Update them if necessary. Create a short one-page document with a list of emergency contacts. Include a trusted family friend. Include a nearby doctor. Include the ambulance service number. By day 30, you will have initiated a health plan. By day 30, you will have started a cash fund. By day 30, you will have organized critical information. This simple 30-day sprint can profoundly change your family's future. This plan is not just a checklist. It is a pathway to taking control. With small, consistent efforts, you can build a robust system that protects your loved ones and your financial well-being. This isn't just about money. It is about reducing stress for everyone. What stops you from starting today? Pick one small step from this plan. That single action can be the beginning of a more secure and peaceful tomorrow. Summary. Step 1. Insurance shield. Step 2. Medical cash fund. Step 3. Documents, nominees, POA. If this helped, like the video and subscribe for more. In India, healthcare often means personal sacrifice. Around half of all health spending is paid directly by families, quietly eroding savings. A single private hospital admission can cost R1.5 to 5 lakh. When a medical need arises, families turn to their most immediate resources: savings, fixed deposits, or even gold set aside for a wedding. Many believe insurance is only for the wealthy, or that it won't happen to them. This optimistic denial leaves the future unprotected unless a simple system is set up in advance. Imagine Ramesh, a software engineer in Bangalore. His financial life is well organized with savings and investments in place. Life feels under control. Then, one morning, his routine is shattered. His father has a sudden heart attack. They rush to a private hospital. The doctors recommend immediate surgery. Relief is quick, but then the estimated cost hits, nearly 4 lakhs. To pay the bill, Ramesh drains his emergency fund, breaks an investment for his child's education, and borrows from family. His father recovers, but the financial aftershock lingers. He's set back by years, his sense of security gone. He was one illness away from a major financial crisis. The stress of a medical emergency is common, but the outcome can be different. You don't need to be a financial expert or have immense wealth to protect your family. What you need is a simple, manageable system. It's about taking small actions today to prevent large burdens tomorrow, protecting your core financial goals like your home and your children's future. The framework I shared consists of 3 straightforward, actionable steps. Together, they form a comprehensive safety net for your family.